Although CPI has come on the expected lines, but it was bloodbath today on the D Street as Nifty hit 7-month low levels after declining for fourth straight session, closing below 23,100 level. In broader markets, both mid-cap and small-cap were down 4%, hitting 7-month low levels. Sectorally, Nifty Realty was the top loser, hitting 9-month low levels. It also registered its biggest single session decline in over 6 months. Other than that, Nifty Energy has hit 1-year low level, and every major other indices has closed day in the red. Meanwhile, India VIX gained 7% today with the kind of volatility which happened during the day. And the India rupee today also breached $86 mark, seeing the worst level since 2023. This comes back on the back of strengthening dollar, robust jobs data in US, and weaker FII inflows into Indian equity market. Let's get into a word from our editor-in-chief Nikunj Dalmia, what the factors working against Indian markets at the current juncture.
It is nothing short of a perfect storm, and a lot of things actually have aligned against us. If one really looks at the global setup, it is a combination of dollar index, rising yields, and the fact that flows are moving out of not India but emerging markets including China. So what was supposed to be a consensus trade that money will come back to emerging markets come 2025, that has not translated into reality, which in a sense is having a impact at the global level. So that's the global setup for you, where just about every emerging market has started correcting. Some of the popular markets like India, that's where the gains are the highest in last couple of years. So I guess they are the ones who have fallen the fastest. Now, how long will this interplay where everybody is hiding into the dollar, or this excitement ahead of Donald Trump inauguration, how long will this last? That's anyone's guess. But my sense is that this is becoming more like a crowded trade, and crowded trade, they seldom last beyond a point. So I'm not saying we are at a point of climax in the global market, but the risk reward ratio now to perhaps buy anything which is largely dollar denominated at these levels clearly cannot be made. So on global level, while the screen is not looking all that exciting, you need to start thinking that how long will this weak dollar interplay will continue. Second is rupee. Completely contrary to what everybody was anticipating and expecting. Rates were supposed to come down globally. Rates were supposed to come down in India. India's core fundamental, which, for rupee to deteriorate, it's a combination of macro and micro. The micro has been slowing down and the macro has been stable considering where the fiscal deficit is, where the high frequency data point is. But the fact that flows are gravitating out of India, Reserve Bank of India's forex reserve has used the forex reserve, that is not helping the currency either.
Nikunj, one more question remains. Where do we go from here? Is the bull market over?
I think that is the most important thing. And I think there is no easy answer. I can stick my neck out and say that last 3 years, we've had a setup of low volatility and high returns. I think we're entering into a setup of high volatility and low returns. To make a case that, okay, we are nearing any kind of a bottom, it would be very early. However, to make a case that, the bull market is over, I think that's foolish. What you need to do in this market is that ask yourself that why you own that stock and what is your time frame. If you keep your return expectations low, extend your time frame, and if you know what you bought, I think you'll survive this. But if you own something which is in leverage, if you don't know why have you bought it, and if expectations are that, oh, you bought the stock and you'll make 50% return in next 6 months, I think that's a silly and foolish kind of return expectations. So what will save you in this market is your identification of the stock, your ability to hold it for next couple of quarters or maybe couple of years, and then keep your return expectations low and understand the business which you own. If you put these filters, I think this would be a passing correction. It's not for the first time in this bull market also we've seen this correction. 2022 we saw this kind of a correction. Before Ukraine and Russia crisis, after the crisis we saw this kind of a correction. We've seen this correction, I think, same time in March or April also, where the mid and small cap stocks, they came and they really got chopped. So it's not that it is game over for the bulls, but yeah, there is definitely a lack of momentum. There is lack of participation. There is no real compulsion for anyone to buy, and that is the ugly part of the market. When the going is good, you get blinded because of the momentum, and when the going gets bad, I think you get blinded by what the opportunity is. So that's my limited point here, that if you don't know what you own, I think it's a bad time to own those stocks. Increase your risk horizon and then keep your return expectations low.
Thanks, Nikunj, for explaining each and every aspect in detail. Now